Well, howdy there, folks. Welcome into today's video. Got to be very quiet for this one. Baby's sleeping. 5 core things I want to go over in this one here today. It is the second video of a 2024 for the channel. First things up, damage day one. I mean, first day of the year and stocks just tanked. So we're going to speak about that. We're going to speak about why this happened, how bad it's going to get. We also are going to speak about Tesla numbers. I've been an investor, obviously, in the company for many years. I want to speak about the numbers, how I feel about those numbers in today's video. Does it tell me anything in regards to the stock about to make a big move downward or upward? We'll speak about that. Fourth thing is Apple got downgraded today, hit the market heavy. It was big news. Want to talk about that downgrade, what's going on there, what it means for the market. And then the last thing is some pretty shocking inflation data. So appreciate y'all joining me, even for a little bit of a quiet video like we got today. Okay, alrighty guys, let's start jumping through this. Okay, so first off, it was just damage everywhere out there, right? AMD first day of trading, down 5.99% here today. Shopify 5.22% down here today. Oobity booba stock 5.18% down today. Snowflake, this ain't no Jake, look at this baby, down 5% today. Intel 4.8%, Netflix 3.7%. This is no way to start a year. The biggest big dog of them all, Apple 3.5%. I was looking at some stocks I hold today, right? Shopify, Baba, Palantir, Honest, Elf, all those stocks got hit pretty heavily today, right? Now, something to keep in mind is if you look at 1 year performance, right? Many of the stocks that got hammered today, they've been the stocks that have been the hottest of the past year, right? And remember what I told you guys was going to happen in Q1 of this year. You remember that? I told you, and I've been telling you this for the last several months, Wall Street's looking for, any reason. They just want to dump out of some of these stocks. Okay, the bottom line is these stocks have been huge money makers. Now you may say, well, why did they wait till literally we start 2024 to start dumping some of these stocks, start taking profits? 2 reasons. One is they didn't want to sell at the end of 2023 because in Q4 of 2023, there was a thought process that we'd have a Santa Claus rally. Guess what we had? A Santa Claus rally. It was tremendous. Q4 of 2023 was tremendous, right? So they didn't want to take profits then. On top of that, no one wanted to book taxable gains in 2023. So everybody's like, I don't want to, why would you, if you were a Wall Streeter out there or somebody with big money, why would you have waited? Why would you wanted to take your profits in 2023? You wouldn't have. You're like, there's too much for gains. And sure enough, if you held stocks through the Q4, it was a right move. And plus now you can sell, you can worry about taxes next year at this point in time, rather than have to worry about taxes in a few months, right? Literally just the difference between selling 1 week versus another week, right? So that's what we have going on here, right? Now, I'm a little, obviously I don't do much ever for like swing trades or anything like that, but knowing what I knew was going to happen here, I will say it was probably not the wisest financial decision to not maybe, let's just call it buy some put options on a few of these stocks for this week, knowing that it was almost a guarantee that Wall Street was going to sell as soon as we got to the new year, right? And sure enough, this is insane. These are just Apple end of week puts. Look at these moves here today. 1,100% up, 1,013%, 691%, 403%, 229%. Let me be very clear. If I had any of these end of week put options, I would have cashed them today. Now, the market could keep going down this week, but I would have for me, I'd have been like, dude, I'll take my 1,000%, my 600%, whatever, and I'm out of here. I'm good with that. That's just my perspective on that, right? But there was an insanely high probability, and as I spoke about time and time again, that the market was going to tank as soon as we got to this new year, right? Look at this. This is AMD put options here today. 518%, 594%. This is gains today. 652%, 616%, 582%, 538%. Just ridiculous. So anybody that, knew what I knew, right, that the market was going to tank here at the beginning of the year because these Wall Streeters were going to sell, good for you. If you did buy any puts out there, geez, some money to be made, right? Now, on the flip side, other stocks held up very well, right? And these are a little bit more sleepy stocks, but they held up well today. Look at Wynn Resorts up nearly 4 percentage points. Revolve was up today. Target was up today. PayPal was even up today, right? Tesla was around break even, which we'll speak about Tesla in just a moment. But you look at a heat map of stocks, and I think it's going to tell you a lot, right? Look at where all the Red Dead Redemption came from. They came from all the stocks that had been hot, that people did not want to take profits on. They didn't want to take profits on these stocks until we get to the new year, right? Meanwhile, a lot of these other stocks that haven't been, let's just call it, as good of performers, they were all green today. It was actually a pretty good day for those stocks, right? So you had a divergence in the market. Now, so we know why this happened, right? Wall Streeters, we're going to take some profits here at the beginning of the year, but let's talk about how bad it will get. Like, are we going to, let's just call it, go a lot lower, okay? Well, we do have a reason the market could start kind of freaking out here. In Q4, the market didn't look at anything as a negative, and that's because Wall Street needed a Santa Claus rally. And so they didn't want any manipulative behavior in terms of, talking about anything bad or anything downside or anything like that. It was, all this stuff got brushed to pass. But now that we're into the new year, they can start talking about bad stuff again, scary stuff again. Oh my gosh, this is bad, this is bad, this is bad. And so, you have obviously the stuff that's going on in the Red Sea right now, right? If they want to start freaking out about this, they can start freaking out about this, right? They could start freaking out from the perspective of, oh my gosh, this is going to mess up supply chains. This is going to cause, this could cause shipping rates to go up substantially, which could hurt companies' margins. You could run a million miles with this if you really want to, and you really want to freak the market out and scare them. Oh, it's going to spike inflation again because it's going to cause a whole chain of events. Like, you can freak everybody out big time. And if they want to blame the market going down here and to really just take more profits, they could blame it on this situation here and kind of freak everybody out real bad, real quick, right? Now, this is the market on average in election years, right? 1949 through 2022. You want to pay attention to this green line right here. This is how the market usually performs. Now, I want to zoom in on the next few months specifically because that's kind of what everybody's focused on, right? So my opinion is, so usually you just kind of have an up, and away for the first, 6 weeks or so of the market, of a new market year and a presidential election where the sitting president's running. Here's my opinion, okay? I think we could have a much more up and down market in this Q1 than a usual market. I think we're going to have some violent moves up and down as we kind of, let's just call it in Q1 in general. I think it's going to be way more volatile. It's such a perfect setup for a very kind of up and down Q1. Such a perfect setup between Wall Streeters wanting to take profits in Q1, looking for a reason to exit some of these stocks and cash some of those profits, and they just need a reason. They just need a reason, okay? Keep that in mind. And on top of that, the VIX has been dead for months, the volatility index. Usually the VIX doesn't die like that for months and months and months until it makes another move, right? And so there's a high probability we're going to get a big spike in the VIX at some point. And when I say big spike, I'm not talking about a 2020 type spike or a great financial crisis. I'm just talking about the VIX goes up, 50%, 100% in a very short amount of time, okay? Something like that. And I think we're kind of set up for a big short-term pop at some point here with the VIX. So being that you got all that there, I think it's going to be a very up and down Q1. I think there's going to be time periods when everybody's kind of flipping out, freaking out, and you're going to see selling. But like I said, guys, like I told you a million times in regards to this, before we get to the Tesla numbers and the rest of this, okay, keep in mind, they don't care about any of this stuff. The Red Sea, all this crap, they don't actually care about any of this. They will use it as an excuse to sell because they want to book some of these profits on some of these stocks, okay? So just a little food for thought. Just remember, they don't actually care about any of this, okay? They use it as an excuse to sell. And then when they're done and they shake out, then they'll go ahead and make their next move, okay? So just something to keep in mind there. Alrighty, cool. So let's talk about Tesla numbers here, okay? Now, first thing I thought was interesting, I saw this on CNBC, they had Rivian right next to Tesla, okay? Now, look at the category they put Rivian in. They put it in the autos category, and look at the category they put Tesla in. They put it in the tech category. I thought that was really interesting, right? Real quick here with Rivian, and before we get to Tesla, this is a perfect situation of trying to get too cute in the market. So, Rivian has been talked about a lot over the past month or so, and the reason being is everybody's kind of wanting to pile into that one because it's like, oh, interest rates could be going down. It's going to benefit Rivian more. Rivian stock could move higher. And then the stock, you get a 10% pie in the face today, right? 10% down that stock is. Stick with what works. I like Rivian. I have exposure through that stock through Amazon, right? Because Amazon owns a ton of Rivian stock. But with that being said, like Rivian, we don't know if they're going to get profitable, when they'll be profitable. We don't even know if they're ever going to be able to scale to big numbers, right? There's just a little guy. Stick with what works. Like in this industry, like if you want to play an EV, you got to continue to play Tesla. Rivian, I understand people want to play it as a trading mechanism, but if you want to play it like that, you can, and then you get 10% down in a day, right? That's just what happens there, right? So in regards to Tesla, Q3 deliveries came in at 484,000. Total production came in at 494,000. Total annual deliveries ended up coming in at over 1.8 million, and total annual production came in at about 1.84 million overall for the company, okay? So how do I feel about the numbers? I will say I'm happy. I'm happy with the numbers. Obviously, not the best demand environment last year for the company with interest rates being so high. I mean, literally, if you look at the beginning of 2022 through the end of 23, literally auto loan rates shot to the moon. It's insane. And so in that environment, to still be growing at the clips Tesla's growing at in terms of deliveries and production, as a Tesla shareholder, I couldn't be happier. In 2022, the Elon Musk-led automaker reported annual deliveries of 1.31 million and production of 1.37 million electric vehicles. The new numbers represent deliveries growth of 38% year over year and production growth of 35% year over year. In 2022, the company reported 40% year over year growth in deliveries. So it's incredible that they, let's just call it, nearly grew just as fast, even with a very bad interest rate environment and even with a consumer that was much more damaged in 23 than 22 because they had been through 2 years of inflation rather than just 1 year of inflation. In its last earnings call in October 2023, Tesla executives offered guidance that the company would notch at least 1.8 million deliveries for the full year, a number that had revised down from a 2 million goal earlier. Analysts had expected Tesla to report deliveries of 477,000, so Tesla beat there. According to consensus estimates compiled by Street Account as of December 28th, deliveries are the closest approximation of sales by Tesla, but are not precisely defined in the company's shareholder communications. Now, here's where things are going to get interesting, right? Is you have a lot of weird stuff going on with Tesla. For instance, I saw this here today. This is weird. You can now buy a Tesla Model 3 Performance for less than a long-range all-wheel drive. And the reason something like this happens is due to the tax credit situation, okay? And some models selling really well, and so they don't get the full 7,500 versus other models do. And so that's a weird dynamic. So you're going to have a lot of weird dynamics here because I was just looking at this and I'm like, man, if I was interested in a Model 3, dang, it's a good time to get a performance Model 3. The fact that you can get that for less at a long range, that's pretty attractive. Cybertruck is, this could be the difference between beating numbers and missing numbers throughout 2024. Depending upon how fast the ramp happens for Cybertruck. Because you got to understand, the difference between Tesla missing, let's call it production numbers, and missing or beating production numbers is usually around 10,000 units. Cybertruck could be the difference between them beating quarterly estimates or missing quarterly estimates for the entire year of 2024. Because the numbers are usually so close between Tesla meeting or missing those numbers. It's incredible, right? Now, in terms of 2024 for Tesla overall, first half of the year, it's all about Cybertruck ramp. I think that's where full focus is. I think that's what the conference call is going to be focused on. How Cybertruck ramping. That's where focus is going to be at. Second half of the year, I think it's different. I think second half of the year, we're really going to talk a lot more about margins. I'm expecting margins to start to uptick in the second half of the year. I wouldn't be surprised if, let's call it 3 and Y start to get some actual price increases as the year goes along. I think they'll bring back some potentially, if you want certain colors, they might be more expensive and things like that. So I'm looking at that and I'm actually expecting margins to potentially uptick in the second half of the year. Only bad thing I really have to say about Tesla here recently is they did have to make some changes to autopilot and full self-driving here recently, okay? Now, I've experienced this, and other Tesla drivers have experienced this. You got to pretty much keep your hand on the wheel the whole time, even when you have autopilot engaged now. Now, one of the beautiful things about autopilot, full self-driving, whatever you want to call it, before, was you didn't really have to keep your hand on the wheel. You could, every once in a while, you have to, touch the steering wheel or change the volume up and down in the vehicle or something like that. But now you actually have to keep your hand on the wheel. So You know, it's not as convenient as it used to be, but the government made them do that, so it is what it is now at this point in time. So anyways, I don't know how that's going to affect full self-driving sales or anything like that. I think that just has to play out. But I have had a few people complain to me about the new changes that Tesla had go through in the last 2 weeks. So a little food for thought in regards to that. But yeah, okay. So next up here, Apple downgrade, and then we'll get to some new shocking inflation data that I was like, woo-wee, we got something going on here, okay? So obviously top news here today in the stock market was Apple. Apple shares fall 4% after Barclays downgrade. So what happened here? Apple shares slid 4%. And isn't it interesting this downgrade comes right after New Year's? Isn't it interesting? Right after the Santa Claus rally's done, the year's over, now the downgrade comes. Why didn't this downgrade come last week? Nothing they have here is new information. Let me just put it like that. We're going to go through it here. But this isn't some new shocking data they have, numbers or something like that. This is all the same stuff you could have had last week, the week before, week before, week before. But isn't it funny? The biggest dog stock in the market gets a downgrade as soon as we get to New Year's, and not the week before by Barclays. You know? It's funny, man. It's funny how all that works, huh? So Barclays downgraded the stock to underweight and slightly trimmed its price target from $161 to $160. That's like, why even change it at that point in time? But anyways, Barclays is expecting the stock to go to $160. Barclay analyst Tim Long, which I think is hilarious because Apple CEOs Tim Cook and Tim Long, it makes me think you're going to go long shares, wrote in a note to clients on Tuesday that iPhone 15's current lackluster sales, specifically in China, basically are similar to weak iPhone 16 sales. So this is intriguing because they're basically saying like iPhone sales are very weak. They're weak in China. And this is a very different opinion and data than another individual that's a big name in the market that I'll show you in just a moment. So very strange that they're basically saying iPhone's not selling all that. We're still picking up weakness on iPhone volumes and mix, as well as a lack of bounce back in Macs, iPads, and wearables, the analyst wrote. Analysts and investors had noted specific weakness in China iPhone sales as far back as October. Long expects that Apple's lucrative services business will also see decelerated growth in part due to regulatory scrutiny. Gross margin in Apple services business is roughly double the margin Apple makes in its hardware products. Apple CEO Tim Cook highlighted better than expected growth in unit on an earlier investor call. But Barclays doesn't necessarily believe that growth is reliable in long term. Quote, in 2024, we should get an initial determination on the Google tech and some App Store investigations could intensify. Interesting, their analyst wrote, referring to the payments Google makes to Apple to retain its default search status. Google CEO Sundar Pichai previously confirmed that the company pays 36% of its Safari search revenue to Apple. So Apple makes bank off that. I believe the number was somewhere around, I want to say it was like $20 billion. It was just an insane number. It was 10 billion plus. That's all I know. It's a ridiculously huge number. And that's just like basically like straight profit for Apple. So this creates a very interesting dilemma for Apple where if this does get taken away, I think it hurts. It could hurt Apple and Google, but I think it hurts Apple a lot more, folks. A lot more. And then if we're talking about investigations intensify there, oh boy, could things get interesting pretty quickly. Now, this is interesting because if you watch my reaction channel today, I reacted to 5 different videos in that one. One of those videos was Dan Ives, and Dan Ives keeps talking about iPhone 15 sales look good to him, and this and that, and our channel checks, everything looks good. And so we got a weird dilemma here where you got Barclays coming out basically saying, hey man, sales are not all that for iPhone 15. They're lackluster. But then you got a Dan Ives who's out here talking about, oh man, everything we see on our channel checks and this and that are all good, right? Now, I gotta say, I love where I'm positioned. I'm very happy with my positioning in Meta and Amazon as my big tech dogs, right? Because I think they have so many less questions to answer than some of these other tech companies, right? Obviously, NVIDIA and Microsoft have a lot of questions to answer about, like, can this AI growth continue? You got Apple and Google, that this government situation, we don't know how bad this is going to go. And if the government stops preventing this, that could negatively affect Google's business. It could affect Apple's numbers quite more significantly, because Apple's making so much profit off that. So I will say Meta and Amazon had the least questions for themselves in 2024 overall, by far, in my personal opinion. So I love the way I'm positioned here. The rest of it's a big question. By the way, I also reacted to another gentleman, Dan Niles. He also believes that Meta and Amazon are the best position stocks. So anyways, you might want to check out that video if you didn't get to check it out earlier today on the reaction channel. Okay. All right. So now let's talk about some new inflation data that's pretty shocking here. So I was looking at Truflation here today. Truflation is now under 2.1% inflation rate in the United States of America. Incredible, right? Which, you're starting to think we might be in ones. Like we might literally start to hit the ones as far as Truflation numbers. I mean, we're almost dang there, right? And Truflation numbers have been kind of, let's just call it, ahead of wherever the government numbers have been. So wherever Truflation's at, the government numbers are probably going there. It's just, it takes a game of catch up, right? It's a game of catch up. I mean, Truflation at 3.1% way before government data had us at that. So whatever you're seeing here, you're likely going to see that in the government numbers. It's going to take a little bit to get there, right? Now, if we go ahead and take a peek at commodities, this is GSG, the commodity index. We're under 20 right now, which is great news for us in regards to inflation. That means that, we're just not getting any sort of commodities inflation right now, which is very good news. We do not want to see commodities inflation at all. If we see big commodities inflation, then we have to really start to worry about inflation again down the road, because the world runs on commodities at the end of the day, right? Everything comes from commodities at the base start of it, right? And then if we look at crude oil, for instance, crude oil is down 21% in the past 3 months. It's showing no life of coming back at the moment. And this is even with all the Middle East drama. All the Middle East drama is going on right now. And oil's still gone down 21% in the past 3 months with all the drama in the Middle East in the past 3 months. That's incredible. Now, something to keep in mind here, okay, and this is out of CNN Business yesterday. Xi Jinping rings in 2024 with rare admission that China's economy is in trouble. Now, if we are in a situation where China starts to stimulate heavy and their economy starts to come back, you could start to see oil prices heat up again. Okay, so just a little food for thought in regards to that. So don't bank on oil being $70 forever. Okay, that's all I'll say about that. Because if they start to stimulate heavy and their economy starts to come back, you're probably going to see higher oil prices overall, right? And if you're wondering kind of what's going on, China's economy has been plagued by a set of problems this year, including a prolonged property downturn, which has been going on for a while, record high youth unemployment, stubbornly weak pricing, and mounting financial stress at local governments. Now, if you talk about the youth unemployment rate in China, it's over 20%. Over 20% youth unemployment rate in China overall. And they kept their economy closed down for far too long, and they're going to need to stimulate their way out of this, in my personal opinion. Now, this is a very similar number that we reached in the United States back in the Great Financial Crisis, which shows you how dire the situation really is in China and how bad their economy is. The fact that their youth unemployment is at rates that are around or even above where we were in the United States after the Great Financial Crisis, that means you're in trouble. That means your economy is in a bad place. But that also means you've already gone through the majority of the pain, and from here you're likely coming out. Just a little food for thought. People look at a number and think because it's super bad now, it's going to get even worse, so it's going to stay that bad. No, if I had to bet, is Chinese economy going to improve in 24 or get worse? I think it's actually going to improve in 24 versus 23 overall, right? Now, this also leads me to something I just want to say. For anybody that's watching this, if you're a Gen Z out there, which most people that watch my channel are millennials, Gen X, and boomers, I'll just be honest with you guys. But for anybody watching this that is Gen Z, okay, keep in mind, you guys have never seen a bad jobs market, ever, in your life. Your whole employment career has been in a great employment picture. It just has, right? And so for us millennials, we went through the Great Financial Crisis, and we have seen how, I was lucky. I felt lucky to get a job cleaning dishes at Einstein Bagels for $7.50 an hour. I felt lucky to work at Walgreens making $8.25 an hour, right? Because look at youth unemployment when I was entering the jobs market. We were 15% plus. And then we stayed 15% plus for years, for 5 years. So just keep that in mind, because this is a time period I think a lot of folks can get kind of lazy. They've never, if you've never really seen a tough jobs market, you can take it for granted, and just don't take that for granted. That's all I'll say about that, because we will see a bad jobs market again someday. It might not be this year. It might be 2 years from now, 4 years from now, 6 years from now, 8 years from now. But I can promise you, we will see a bad jobs market again. And you don't want to be one of the weakest of the weak, because the weakest of the weak, at the end of the day, is a dog-eat-dog world. And the weakest of the weak will be caught. Okay, so just a little food for thought in regards to that. So Chinese economy, I think, starts to get better. That could be a little bullish for oil prices, which could start to hurt inflation numbers maybe in the back half of 24 going into 25, something like that. So just something to kind of keep in mind there, okay? Now, with everything going on, I created a big video for you guys. I think only like 2,000 of you guys have access to this so far. It's pinned comment down there. You need access to this. Watch the video. It's like a 40-something minute video. Goes all in depth on exactly how I plan to invest in 2024. It's going to help you out immensely. I think it's a very important video. Let's just put it that way, okay? It's pinned comment down there. If you're watching this and you're not going down to click that pinned comment and get access to this, like, what are you doing? You're not going to watch a more valuable video than that. I promise you. Whatever video you see on the sidebar, even if it's my video, it's not going to be more valuable than that video. That's all I'm going to say to you, okay? That you probably got some doomsday videos over there. Oh, it's the end of the world. This and that. Oh, my gosh. Trust me. Pin comment down there. Get access to that and enjoy that, okay? All right, guys. Much love as always, and have a great day.